Hello, traders. I want to talk about today's price action. We're going to look at Nasdaq first. I trade the MNQ. I'm going to talk to you a little bit about the psychology I've been working on. I listened to a guy and he said you should trade size that is small enough that wins don't excite you and losses don't upset you. Because when you get excited, you're not trading in your logical brain. And when you get upset, you're not trading in your logical brain. And when you're trading, you need to maintain a sense of logic the entire time so you can see the market clearly. And so that's what I've really been working hard on for the last month or so. I did have a little blow up last Friday. I traded a product I don't normally trade. Tried to trade gold and went kind of nuts. I was copying a couple of accounts and blew them up. And that was a hard thing to go through the weekend, knowing I just blew up a bunch of accounts. Or it was just two accounts, but still, I blew them up because I lost control. I got angry, and I knew that I had a really good feeling that gold was going to reverse and go back up. Well, I thought it was going to happen at 4,200, and it happened at 4,100, and I ended up losing $100 a clip until I blew my accounts. And so, and I stopped myself, but the accounts were already so far depleted that it didn't really make much of a difference. Um, but now let's talk about today. I put up a video a while back called the 1 minute the first candle hack. First candle hack. Well, this doesn't happen every day, but on a directional day like today, it works wonderfully. And of course, we opened with a gap down, so that was kind of an indicator that we may be going down for the day. Sometimes it'll go fill that gap, but you can see we opened with a gap down and we made no attempt to fill it at all. It was a gap and go kind of a situation. And we did push down for that first 7 minutes and then started back up, but we didn't even get to the high of that first 1 minute candle. We didn't even take that high. And then we pulled away with a fair value gap. That's your signal. Get in and aim for that weekly low. And that's what I did right there. Now, once we got past this weekly low, I did take a long here, and I was concerned when we didn't start pushing up rapidly. I was a little concerned because I thought we might go up here to pre-market high, which was just above this opening candle right up here. But when we didn't just start racing there, I got a little concerned. I took it off, and then we made a new low here. That was unexpected. But the reason we did that, I'll show you on ES here in just a minute. NQ had already taken its cluster of weekly lows. We had these marked out right here. These are all weekly lows. And then there's a opening gap on the weekly. So I felt like that was our target for downside. We'd already just we even opened below these, so I knew they could possibly be the target, but we already opened below them, so we would have had to gone straight up at the open if that was the target. So I figured these were the target. But ES had similar, and they were well below the market. You can see we took out this one, worked into a fair value gap on the weekly chart right there. And so that was where I felt like the market was going to trade. I had two hypos. One, we trade up first and then down, and then the other one would be go straight down. And I was thinking once we got these taken, we might go back up. And so I did take a long there. And it worked out, but it didn't didn't go as high as I expected it to. When we didn't even make it back to the low of that opening range candle, I knew the jig was up. We were after 11. The market had not reversed. And so directional day is what you plan on there. Once 11 o'clock comes and we haven't taken out that high, you just expect a directional day and buy any push up or sell any push that goes up is the name of the game on that. And so that's exactly what we ended up doing. My long worked out. We didn't get all the way up here, but once it got up here and started this business, I had a stop down here. I think it was below this candle, but once it started all that, I just killed it. And I made profit on it, but not as much as I would like to have made. I should have taken the short, but at that point I was kind of tired, and I just I already made my money for the day, and so I just locked out, and I missed all of this price action here. But that name of the short was one that you could have just held all night, put your stop above here, held it all day long, and you would have been making some serious bank. That's why you play this first 1 minute range, though. The first 1 minute candle, your stop goes, when we pull away from it like that, your stop goes above it. And that trade works out at least 50% of the time, whether it's going up or down. But this push up right here didn't even get back to the bottom. Now let's look at ES. We'll look at its weekly chart first. Weekly chart first. And you can see it had relative equal lows here. Well, in comparison on NQ, when it hit these, it hit them on the first push down. So it hit them about right here, and then we went back up. Where ES was only trading around the 64.60 mark when NQ took these lows. So I knew ES had a little further to go down, and it did. It came and took them out by the end of the day. And I think it even pushed a little bit lower into this new week opening gap from January. Does that say January? That says June of 2025. It's been a long time since we visited that area. I remember when these came up, I said, this area is going to get revisited at some point. You can go back and look at videos I made at that time, and I was expecting it to go back quicker than we did, but man, it's been a long time since we were in this area. But anytime you see relative equal lows like that on a higher time frame, it's going to be a target eventually when we start selling off. So let's look at its 1 minute chart. It does a little bit better job of going back to that first 1 minute candle. So here's our first push. Open with a gap down, just like NQ. The equities are definitely running in sync. So there's our first 1 minute candle right there. Of course, we open, we push away with a fair value gap. We wick into it there. You could have gone short there and tried. I like to see it come back up and try to make another high and fail before I jump in. So I jumped in here. Of course, I was doing NQ, but that's where I jumped in. And once NQ took its weekly low, which was here, then it did this same little dance, made a new low, did a little messing around. You could have put your stop below here and just aimed for most recent swing high and made money there. It kind of got scary for a minute, but then London MOC pushed us up to here. And that's right at 11:30. And see how we wicked into the low of this opening range candle? We did not take that high. That's a lower high. Pushed down with fair value gaps, tried to go higher again, failed. That's your short right there. When you push away with that fair value gap, that's your short. And then you would just be aiming for those weekly lows down here. And that is a really nice move in ES. That's 40 points at $5 a point on a micro. So it's really good. On one micro, $5 a point, $200 to there. I usually trade two, so that's a $400 move. And two micros if I'm doing ES. And I would probably have added, when we took that high and pulled back, I probably would have added a little more in there. That's a really nice trade, nice movement. Good deal for that, for ES there. So there are some rules on Friday. Because we were in such a consolidation most of the week. I mean, we had a nice push down yesterday, but most of the week was kind of choppy mess. And that's real typical post rollover. The rollover was Friday, but people with big money are still trying to get their bets in. And I've seen rollover do two things afterwards. If you go back and look at every rollover, which it recurs every three months, it'll either, once the rollover is complete, go straight up for a few days, maybe the week after, or it'll go straight down. Rarely does it go up and down and up and down. It makes a big move after rollover. And you can go back and look. You don't take my word for it. So now that these weekly lows have been taken, does that mean we are done going down? I mean, we were consolidated here. If you looked at the weekly chart as though it was a 1 minute chart, we had a lower high and then we started offering lower. We got a new week opening gap there. Well, we've taken out a nice level there. We got some others down here that we could possibly offer to. Does this mean we go back up next week? Or are we going to keep on selling off? I mean, that's all the movement that Topstep's chart will allow. We're in a fair value gap there on the weekly. We could possibly fill it, maybe offer down to half of this run here would be apropos. Maybe down to this area here, 2260-ish. Maybe even that far, 650. Or we may just stop right here in this fair value gap and begin offering higher. It's hard to say. Really can't predict once it goes and takes a major level like those relative equal lows, what's going to happen next. I know today it continued to sell off, so and no telling. That's really all the pattern we had today because there was no real reversal pattern. You could have tried to catch something in these little moves here, but there was no real reversal pattern that I could mark out. You could do the one where it made a new low and say that was it, but right here. But we never swept any liquidity up above. You would have just had to kill it when it got to a certain point. But right here, we push up, we fail to make a new high, and we come back down and we make a higher low. So aiming for that liquidity from this low, you could have jumped in there and got that liquidity and even a little bit more. That's a nice little reversal. See, that's if you went all the way for the low, he wouldn't get in there. You'd get in right here at this fair value gap. 81 points to there. You could have got 100 points out of it if you left it go for just a minute. But when it took that high and pulled all the way back here, that's kind of scary. I think that would be your entry right there. So to those highs is 94 points. Not bad. But I know, like, if you were like me, you'd be aiming for here. And then we get ripped on that. So definitely this one is the better of the two. We push down, fail to take out any liquidity, push back up, lower high, pull away with a fair value gap. It's after 11. That's your trade right there. All right. Well, I hope everybody had a good week. Made a lot of money. You can go through your charts and kind of look at these reversal patterns for the week. I didn't put too many videos on. Here we have the highest high. This would be our breaker candle there. We got below it. We pushed up, failed to make a new high. This is a choppy mess. We didn't get a fair value gap in here, but I did go ahead and enter a trade here just because we broke through these and we didn't pop back up. So I went ahead and got short there. And I believe I was just aiming for this low right here. I think I had a level picked out where I aimed for a little bit lower. But that ended up being a directional day as well. And this is one where the first minute candle could come into play, but only after it breaks the low. See right here? Lower high there, pull away, fair value gap, sell short. You're good. You're good for a long time. You got in right there at that fair value gap. If you had a level marked out, which I did have several of them marked out, there were 4-hour regular trading hour lows from previous days and daily lows, weekly lows. That's 314 points from there. So you don't have to get in at the high to make good money. Just from the high to here is 100 points, if I'm not mistaken. If you got in at this consolidation after lower high right there, like say right here, and just aim for that low, that's 100 points. $200 on one micro, you're done for the day. I'm sticking to my $200 a day average. Trying to get all 5 of my accounts funded. Since I went nuts last Friday, I lost a couple of accounts. I got one funded, got 2 more that are almost funded. And when I get a payout from them, I'm going to buy the last two. Hopefully, I might go ahead and get them before this Alex Gold thing runs out, where I can get $26 off. I haven't decided yet. I'm going to see how work goes this weekend. If it's good to me, then I might go ahead and buy them this weekend. But keeping that size small and just going for those small $200, $300 days has really helped me psychologically, where I'm not trying for $1,000 day. They have come. I've made $2,000 days this week, trade copying 3 accounts. So um, those are nice days to have, but they're not my goal. I'm not going in saying I'm not quitting trading until I get $1,000. I'm going in thinking I'm just going to try to make a couple $100. And then when I get there, then I have to assess, is there a setup good enough for me to risk my $200 day? Because I know that $200 is going to transfer 5 months from now into over $200,000 when I'm trade copying 5 accounts. If you haven't seen that video, go look at the channel at that video. It says how to day trade for a living. And it shows you it's a trading scaling plan that I'm using. And I know 100% with $200 days, I can have that kind of success over time. If I'm trying for $1,500 days, I let $200 days go all the time. Over the last year, I can think, oh, I was up $200 and I wasn't happy with it. So I continued to try to trade and get more. And I lost that $200. It's happened thousands of times where I was up $200 but was unhappy with it. So now I'm just going to be happy with it. There were several days this week where I made $200-300 and I just locked out. Just locked out because I'm trying to train myself that that's enough. That's enough. I've been doing this too long to continually try for big days and end up losing the money I already made. I had the week prior, I had 2 days where I was up $300 and I tried for more and ended up in the hole for the day on both days. And there was a Thursday and a Friday. And I was like, what in the world? Why didn't I just stop? So it's still a work in progress, guys. This trading thing, it's difficult. The most difficult part is psychological. I've got a good trade setup. I've got all this stuff working in my favor. My edge in the market is there. It's my mental edge that I've had to work on. It's my mental edge that's causing me not to be as successful as I want to be. And so if you're struggling with that same deal, Mark Douglas, he's written several books. Listen to him. Anybody that talks about him or that talks about trading psychology that uses his uh, stuff, they'll say the same thing. You got to trade to where you're not getting emotionally involved in the trade, and you don't have a numbers goal that makes you emotionally involved. These accounts are so small; it's so easy to blow them up if you're putting on huge size. Eventually, you can scale it to where you can put on that kind of size. But if you try to do it in the beginning, you have to be perfect or you're going to blow up your account. As soon as you have a big loss, you're going to go nuts. You're going to start trading like a maniac. It happens. It happens to me. I've been doing it a lot longer than most people on Topstep, and it still happens to me. So don't think you're immune to it. You think you're past all of it, and then you'll have a day like I did last Friday, where you just get emotionally caught up. It's your fight or flight system, and you think you can think logically. You think you can stop yourself, but it's like being in a gun battle, and you're in survival mode, and you're viewing that money as survival, and you're doing anything you can to get it back, and you are completely out of your mind in that situation. Your logical mind. Nothing you do is logical. You can go after you blow your account, maybe you go do something else, and then you'll be like, why did I do that? Well, that's why. It's a natural response to a threat. Your body is seeing the loss of that money as a physical threat to your survival. Even though it doesn't make sense, that's what's happening. And so it's doing everything it can to get you back into a place where you can thrive and where you can survive. You're not going to die, but at the time it feels like you're going to die. So, or your body is thinking of it as this, and that's why we go on tilt. That's why we end up blowing accounts, just because we've had a bad day or just one bad trade. And one of the psychologists I was listening to talked about she was trying to pay off her debt, and she had built up her last payment. She needed $8,000. She had built up her account. She needed one more $200 day, and she was going to have the $8,000 to be debt free. And she took a trade, the very first trade of the day, to get that $200, and she lost it. Within 15 minutes, she had blown her account, all $8,000 gone. And she's a psychologist. She knows exactly what's going on. But that just goes to show you, just because you think you're past all of it, it's part of the human condition. Humans aren't equipped to do this naturally. We have to learn. We have to learn what our responses. Even blowing up accounts, you think, oh, wish I quit doing that. It's necessary. It's a necessary part of the process, so you can learn. How do I feel when I'm about to blow up an account? How did that trade affect me emotionally? When this happens again, what am I going to do to prevent it? You have to experience it before you can overcome it. So keep your chin up, keep working. We're getting there. I'm 100% certain, just the way I've been trading in the last month with this new psychological stuff I've been working on, that I'm going to get a really nice payout very soon. And I'll be happy to share that with you. Not to brag,